Welcome to the Deep Dive. Today we're plunging into an economic story that's taking some really unexpected turns. Despite recent policy shifts, the U.S. dollar, it just hit a three-year low. Actually, its worst start to a year since 1973. So we're going to pull back the curtain on what's really shaping the global economy right now. We'll touch on surprising inflation dynamics, shifts in how you spend your money, and maybe even the future of scientific discovery. It's all based on the material you've shared with us.
Exactly. And our mission here really is to cut through all the noise. We want to pull out the essential insights from these, pretty diverse sources, help you see the hidden connections between these trends, and crucially, what they might mean for your daily life and the world ahead.
Okay, let's kick off with this dollar dive then. It seems pretty significant. Since the start of 2025, down a striking 9% against major currencies. So for anyone planning a trip abroad, that means things just got more expensive. But for U.S. exporters, maybe a silver lining. Makes their goods cheaper overseas. Yep.
Right. And what's really fascinating here, I think, is that this isn't just your typical trade fluctuation, this sustained decline. It might signal something deeper, a kind of global economic realignment. It suggests, maybe growing uncertainty about the U.S.'s traditional role as the, unquestioned financial anchor, which naturally lessens foreign demand for U.S. assets. And importantly, it fuels what we call imported inflation. So the cost of goods brought into the U.S., that's likely to rise for you.
Okay, imported inflation. So speaking of inflation, let's look at the latest numbers. May 2025, consumer prices just inched up 0.1%, the annual rate sitting at 2.4%, which is interesting because April was 2.3%, the softest pace since early 2021, even with that small monthly bump. And here's a really counterintuitive detail. Airfare prices actually dropped, down 7.3% over the year, ending in May. What's going on there?
Yeah, that's a great point because it ties into the bigger question, doesn't it? Why aren't tariffs, which usually push prices up, hitting consumers as hard as maybe forecast? I think the real takeaway here is corporate resilience. It's acting as a kind of shock absorber. For instance, something like 57% of S&P 500 companies, they actually reiterated their financial guidance right when tariff uncertainty was highest. That suggests, a pretty adaptable corporate strategy. And if you look at the big picture, the total collected tariffs, maybe $350 billion a year, that's still relatively small compared to the, $23 trillion U.S. disposable income. So it seems companies are absorbing a lot of that pressure, not just passing it all straight to you.
Right, okay. So corporations are buffering some of the impact. So given this picture, surprising dollar moves, nuanced inflation, what does this mean for the market outlook? We're hearing talk of increased macroeconomic volatility for the second half of 2025.
Yeah, looking at that broader landscape, JP Morgan's forecast does point towards a broad-based downshift in global growth. And while it's not their base case, their primary prediction, there's a notable 40% probability they see of the U.S. economy actually sliding into recession later this year. And this is heavily influenced by how tariffs work through the system. Three channels, really. First, the fading of front-loaded purchases, companies buying ahead, that demand slows. Second, tariffs basically act like a tax increase for households and businesses. And third, depressed business sentiment. That plays a big role, too.
That makes a lot of sense, especially the front-loading effect wearing off. But what about longer term? What does this mean for U.S. exceptionalism, that idea that the U.S. economy just keeps outperforming? Is that era fading?
Well, the view gaining traction is that maybe that period of significant U.S. outperformance, it might not return quite like before. There are factors like potential damage to corporate profit margins, households having to dip into savings to absorb shocks like tariffs, and also the longer-term impact of, say, reduced immigrant flows. But maybe a brighter note for your investment portfolio, perhaps. International stocks are now expected to trade more favorably. And emerging market currencies, they're forecast to strengthen against the dollar. So definitely a shift to watch.
Interesting. A potential rebalancing. Okay, let's pivot a bit. Away from the direct economic numbers. How do these big shifts impact your daily life and maybe even future innovation? Because there seems to be this weird disconnect in consumer behavior right now.
Oh, there really is. It's quite striking. Global consumer sentiment is actually poorer than early 2020, yet spending continues. It's almost like people are saying, okay, things are uncertain, but I still want my takeout. We're definitely seeing this bring it to me mindset solidify. Food delivery share of global food service spending, it went from 9% in 2019 to 21% in 2024. That's huge. It suggests consumers are making these cross-category trade-offs, maybe cutting back on something non-discretionary to splurge on something else, even if that thing is discretionary, tells you something about priorities.
Yeah, priority shifting. And speaking of long-term impacts and priorities, What about the direct effects of policy decisions on, well, scientific discovery, the pace of progress?
This brings us to a point that's frankly quite concerning. There are proposed federal funding cuts on the table that are incredibly significant. We're talking potentially NASA's science funding down by 47%, the National Science Foundation maybe 56%. Think about what that means regionally. Ohio's Research One universities, they could face over $106 million in NIH cuts. Ohio State alone could lose nearly $50 million. Experts are genuinely warning this could, and I quote, set back advancements in medicine for decades and also dramatically slow new space discoveries. It impacts training future scientists, too. It really makes you wonder, doesn't it, what breakthroughs that we'd be unknowingly pushing off.
Wow. That puts a very different perspective on budget decisions.
Yeah.
So we've definitely taken a deep dive here. It's a complex picture for the rest of 2025. Surprising dollar trends, shifting economic forecasts, these evolving consumer habits, and potential impacts on science. It's all deeply interwoven.
It really is. So as you think about all these interconnected shifts, how your own purchasing power is affected, the dynamics of global markets, even the pace of human discovery, what stands out to you? What do you think is the most critical trend to watch and really try to understand in the coming months?